have two friends of mine. One is Mr. A and one is Mr. B. Mr. A is highly talented. He is a rank holder in his studies. He has lot of business ideas, but unfortunately he has got no money in his pocket. Mr. B has continuously failed in all the exams, no talent at all, no knowledge. He doesn't even know the spelling of what is knowledge, but his pocket is full of money. Mr. A has brain, Mr. B has money. Now, can Mr. A start the business only with the help of his brain? Definitely not. You can't run a business without having money. Then can Mr. B run the business only with the money? Definitely not. He has only money, but he has no idea as to what to do with that money. Now, Mr. A and Mr. B will join together and then start a business. Will it be successful? Definitely yes. One will invest money, another will invest his knowledge. Both of them will run the business very successfully. Friends, the biggest limitation of sole proprietorship is it is one man show. You only should have knowledge, you only should have time, you only should have money, you only should have all the resources, which may not be possible all the time. To make a team, I should have a batsman and I should have a bowler. Expecting one person to do everything would be very difficult. Now, then why did partnership come into picture? Exactly, this is the reason, where one person cannot have both knowledge as well as money. One person will have knowledge, another person will have money. Both of them, when they join and start a business, we call such a business as partnership. Now, there is a Partnership Act 1932 which defines what is partnership. It says partnership is a relationship between two or more individuals who have agreed to share the profits in the business, which is going to be carried on by all of them or any one of them acting on behalf of all. That means the definition itself gives you 4 important points. What are the features of partnership? Number 1, there should be minimum 2 or more person. Can one person start a partnership firm? Definitely not. Where is the partner when it is only one person? That means first basic nature of partnership is there should be 2 or more persons. Number 2, there should be an agreement. They should agree upon certain factors as to how much should be my capital, how much of time you should spend, where we should start the business, which product we should sell, how much profit should come to me, how much profit should go to you. All these things should be discussed and decided before starting the partnership. That means there should be an agreement. Third one, there should be a lawful legal business. They should start a lawful legal business. If I say I and my friend are partners, what are we doing? Nothing. Is it a partnership? Definitely not. Therefore, there should be a business which should be legal. Last one, there should be sharing of profit or loss. Now, just now I said there should be an agreement among the partners. They should discuss and decide. Today, I told my partner that you will get 1000 rupees profit, I will get 1000 rupees profit. Both of us agreed. 1 year later, he came to me asking for 2000 rupees profit. I said, I can't give you. And he said, you promised me 1 year before. Now, to avoid such problems which are expected to come in future, both of us will write everything whatever we have agreed, and such a document which is in writing, wherein we write all the details about our understanding, such a document is called as partnership deed. A partnership deed is a written document wherein all the partners will sign by writing the points which they have agreed. Then what are the contents in partnership deed? What all we will have? Number 1, we will have name of the partnership firm. Number 2, we will have name and address of all the partners. Number 3, we will have nature of business, what kind of business we are going to do, whether it is production or whether it is service or whether it is only sale of goods. Last content of the partnership deed would be profit sharing ratio and also the principal place of business. How much is the sharing ratio between us and where are we going to start our business? Then what will happen if there is no partnership deed? Assume I, Mr. A and Mr. B started a business without having any partnership deed. At the end of the year, what are the rules that we should follow? Understand friends, if we have a partnership deed, then we should follow what we have written in the partnership deed. If partnership deed is not there, then what we should do? Number one, both the partners will share profit and loss equally. No partner will get interest on his capital. No partner will have to pay interest on his drawings. No partner will get any extra salary or remuneration or commission or by whatever name you call. Lastly, if any partner has given loan to the partnership firm, then he will be given an interest of 6% per annum. Remember, these rules will be followed only when there is no partnership deed. In sole trading concern, we need not have to worry too much about how do we maintain capital account of the owner. The reason is, it is his money. He will invest, he will take back, he himself will not pay interest on his own capital, he himself will not get interest on drawings. He need not have to worry too much because it is his own money. But when we have more than one person, there will be chances of differences arising between partners. One partner may think that other partner has invested only 100 rupees, whereas reality may be he might have invested 120 rupees. So to make sure that there is no possibility of differences arising between two partners, we need to maintain the accounts in a very systematic manner. Friends, there are two ways of maintaining capital accounts under partnership firm. Number one, fixed capital accounting system. Number two, fluctuating capital accounting system. The name itself says, in fixed capital system, we will have only two items and the amount of fixed capital account balance will remain same unless there is any additional investment. That means I will have only initial capital of partner plus if there are any additional amount invested by the partner, only that will be taken. I will not add anything or I will not deduct anything from capital account. Then where will all these other items go? We will pay salary to the partners, we may pay commission to the partners, we may give him part of the profit, we may transfer some loss to him. Where will all these items go? These items will not go to capital account, these will go to a separate account called as partner's current account. That means there are two accounts to be maintained under fixed accounting system. Number one, fixed capital accounts. Number two, current accounts. Now, what all will come in fixed capital accounts? Only two things. Number one, initial capital of the partner. Number two, any additional investment made by the partner. All other things such as salary paid to partner, commission paid to partner, interest on capital, interest on drawing, share of profit or share of loss, all these will go to an account called as partner's current account. Now, where will you show capital account? We all know, on the liability side of the balance sheet. Then where we will show current account, it will be shown immediately after capital account on the same liability side of the balance sheet. The second system of capital account is fluctuating capital account system. Quite simple. This is the way we have been preparing capital accounts. Start from opening balance, then all the items that are related to partners will be written in one account. That means we will not have a concept called partner's current account if we maintain their capital accounts under fluctuating capital system. There will be only one account. We start with opening balance, all the additions, all the money taken back, then interest on capital, interest on drawings, profit, loss, salary, commission, anything that you pay, anything that you take from the partner, if it is related to a partner, then it will come in one single account called as capital account. Will there be a current account now again? Definitely not. What is interest on capital and interest on drawings? Partners have invested money in the company for which partnership firm will pay some amount of interest to them, which is called as interest on capital. The reversal of this is when partners take money from the firm, they should pay interest to the firm. Such an interest is called as interest on drawings. I quickly repeat. When partners invest money in the firm, firm will pay interest to them. It is called as interest on capital. When partners withdraw money from the firm's account, now it is called as drawings on which you pay interest. Such an interest is called as interest on drawings. Next concept to understand is profit and loss appropriation account. In simple, profit and loss appropriation account is an extension of profit and loss account. What is the end result of profit and loss account? Either net profit or net loss. After that comes profit and loss appropriation account. Appropriation, the name itself says distribution. How much of the money is being given to Mr. A, one of the partner, and how much of the money is being given to Mr. B, the other partner, either in the form of interest or in the form of commission or in the form of salary or in the form of profit. Whatever you pay to the partners will come in an account called as profit and loss appropriation account. In the problem section, we will be discussing calculation of all these items.